Hey everybody, good morning. It is Hans Albrecht. Let me get you on the proper screen here. I cannot, this upward position will not do. It's going to make me look um, very, very tall. That's okay. I'm still tall. Okay, let's keep it as is. So welcome to the State of the Market. I'm Hans Albrecht, head of income trading at Option Pit. So a little background on me, if you guys haven't seen me before, 15 years as a pro options market maker, volatility arbitrage, lots of long, short option strategies over that period. Only got paid if I made money. Now that is how you learn to play this game, because there are, of course, all sorts of experts out there, macro people, sorts of people who have lots of opinions, yet they never make money. And so you really want to learn how to do this from the ground up. And that's what it was like learning as a market maker. Then for a decade, I managed a whole bunch of option income funds, Black Swan downside protect funds. So $1 billion managed in option strategies over 3 decades, a full 3 decades in the trenches. My goodness, the time has flown. And today, we're going to talk about our state of the market, which is our effort to give you what is going on out there in the world, what is important, what are the themes that make sense, and where we see opportunity. We're watching sentiment. We are watching charts. We've got Alicia on the charts. We've got everybody on volatility, because what do we do when we trade options? We trade sentiment, we trade emotion, we trade fear and greed and everything in between. And the world changes, as we know, the world's changing now with AI. The world changes, but behavior is quite consistent over time. And so we want to play within that sandbox. And when we can understand those things, we're going to do quite a bit better. So let's take a look at my slide here. CME, it's all about Fed and rates this week, right? It's all about Fed and rates this week. Quarter point cut looks like a done deal. We got some retail sales this morning that were pretty darn good, right? They were pretty darn good. And so I think that sort of puts to rest this idea for the moment that the economy is falling off a cliff. We have some employment softness, of course, but this is kind of what we like to see. So when you're looking for those, when you're reading the tea leaves and you're reading between the lines and all that stuff, you want to kind of have this overall view of, well, is the porridge warm? Is it too hot? Is it too cold? Or is it just perfectly warm, right? The Three Bears analogy. And so right now, I think it's quite warm. So we've got this balance out there that is more or less kind of just what the market likes. The market doesn't like uncertainty. Now we pretty much have that quarter point baked in. We can see here, it's happening. Is it going to be 50? I don't think Powell's going to go too far and do 50 and kind of alarm people. I don't think it's really necessary, but we could very well have another 25 in October. So what does that do? Well, we have this amazing sort of outlook for stocks. And you guys know, if you've been watching me, that I've been talking about AI. I've been talking about this big, amazing roaring 20s type boom that's going to be happening here. I've been talking about that for almost 1,000 points on the S&P. I said, we are going to get an AI melt up. We are going to see that inflation is not a problem, that jobs will be a problem at some point. And that we are going to have all these things, these tariffs. We're going to get past some of these negatives, and we're going to get to those nicer things at the back end of the administration, the Trump administration, which was tariffs up front, and then those nice things like taxes, regulation, some of the benefits that we're going to see, least of which is the AI-infused productivity boom that we're going to see out there. I think that's part of why this market is very, very well bid. So the setup of easing inflation, economic growth, which is good, retail sales, quite good. We've seen some cracks in some areas of discretionary. There's no question about it, but very strong earnings in our last earnings season. Very, very good profit margins. Anybody talking about recession or stagflation, all this stuff, it's kind of nonsense, right? It's nonsense. You're prognosticating and you're not looking at what's right in front of you. So from a market's perspective, a little bit of inflation is okay. Rates are coming down. We've got all these regulatory tailwinds. You can see some of these great names. Let's talk about, here's one, Goldman Sachs. We did a turbo trade in here. I've been talking about this thing since $600. It's now almost $800. This is an AI name that nobody really thinks about, right? It's AI, but because they're going to be having efficiencies. They're going to be probably letting people go. They're going to be doing a lot more of their processes using technology. They've got lower rates that are going to start juicing the economy. IPOs. I said months ago, I said we are going to have an IPO boom from AI that we haven't seen in a very long time. Deals, IPOs, these kinds of companies, Blackstone, et cetera. Lots of companies that can really benefit from this big, wonderful melt up. So here's our turbo trade up 118%. So I'm not going to go over all these trades. Today we are talking about this roaring 20s AI infused period that we're going to be in. And I think that's a really, really exciting thing because it's going to sort of spread throughout the economy, right? So, and I want to tell you about this one sector, this theme that I think is very, very exciting. We've been playing it for a little while, and that sector is real estate and all the sort of secondary interesting things that benefit from that. There are a lot of things that benefit from that, right? And part of this is, and it's not even necessary, but part of it is this recent Trump declaration that he's going to declare housing as a housing emergency. Right. So that's always nice. Right. So we have positions in nuclear and power generation, things like that. What have they been saying? Well, we have to support nuclear. We have to support power gen. There's not going to be enough power. So when I have governments adding to an already good theme, then I feel even better about that, right? There's not going to be enough power. There's not going to be enough data centers. The cities are already showing signs of strain from the data centers that we have. So nice theme there. Real estate might be that sleeper story here because we have this sort of secondary and tertiary benefit from all these things, right? We could unfreeze a massive, massive sector. Lots of people own stocks. A lot of people own homes and they've been frozen. They cannot move because of high mortgage rates. Sure, there's some ability to tap some of that equity, but there is a massive amount of equity there, right? So think of the equity. It's up, I think last I looked, it was up about 40%, home equity up 40% since maybe 2021 to 2022. That is a big, big chunk of cash sitting there like an ATM. So do you see the theme that's going on here? Trump wants rates down. He wants to juice things with AI infrastructure. He wants the wealth effect from the stock market. What does wealth effect do? It keeps the engine going, right? 70% consumer-driven economy. It keeps the engine going. Infrastructure, keeping that economy going, and then unlocking this massive, massive theme. Like think about all these other things that come with it, all these zoning processes, lawyers, agents, tons of agents, probably too many real estate agents in the world, right? In the US. Agents starting to make commissions again, endless sort of permitting and all those fees that kind of happen everywhere. And then some of those stocks that are really going to benefit. And I'm going to give you one of them today. And what I like about them is that we have this combination of real world real estate, having to have a home, having to move perhaps, relocating for job, right? If the job market is suddenly in flux because of AI, there's going to be moving, there's going to be downsizing, there's going to be upsizing for people who've done well. There's going to be all kinds of stuff going on. And it is a massive, massive sector that's kind of been forgotten about over the last few years because it's been frozen. So I think that's very, very exciting. You know, it's going to spread to the Home Depots and the Ronas and you name it. You can kind of extend those ideas as far as you wish. So let's talk about all these amazing things that are going to happen as this becomes yet another Hail Mary, as I like to call it. We have the end of tariffs, the booming of AI infusing itself into the economy. Think of how that's going to spread throughout small and medium companies who can now do as much as they did before with 10 employees versus 20 or 25 employees. But in my view, there's a lot of negativity around that. I like to be a bit more positive about that. I think that AI at this point, to put the jobs issue to rest, which I think will stabilize here at some point. It's in motion, right? There's going to be a lot of movement in the jobs market to place people where they need to be. There will be some areas that are going to be threatened, and those folks will have to figure out a way around that and move into something else. But I think it's a very collaborative thing at the moment. It's not the easy button thing that everybody thinks it is. It's not pressing a button and you just replace entire departments and processes, and you can get rid of Salesforce and you can get rid of all these processes. It's not there. Maybe in 4 or 5 years it'll be there, but it's not. It's collaborative. So I think I think from that perspective, things are okay. So you've got good employment, you've got toppy inflation, which I've been calling for a long time. You've got strong economy. You've got, again, look at retail sales. You've got good things happening, rates coming down, roaring 20s. This is very, very exciting stuff. So let me tell you. So here is the stock I'm going to tell you about today. It's Rocket, right? Rocket. They've been buying a number of pieces of this sort of vertical stack of value that real estate companies get into, Redfin, and they are going to deliver value along those pieces of the process and stack because they have it all more or less in-house now. And there are a number of companies that are going to benefit from this. We've been playing this since around 14. You can see here we've got a nice green MTI here acting really well. Over here, just really not acting well. This has been telling you, look, stay the heck out of this thing. Terrific. Here we're starting to see this sort of constructive momentum and some of the ingredients that go into that indicator. And here we are, boom, breaking out again, looking good. We could pull back to the 20s, but think about when I have my trader hat on and my volatility hat on, I'm always trying to think of, even if I'm stuck in if I'm trading something shorter term, I'm always thinking of that longer term durability, right? Where are the durable themes? That's what prevents me from panicking at times. That's what prevents me from thinking, oh, maybe this is over, or I'm getting into weed stocks or something like that. I like to look at these strong secular themes and turning points, right? The fork in the road. I think we can all kind of see AI and rate cuts, which we haven't seen in a very, very long time, as a bit of a fork in the road. And what do you do when you come to a fork in the road? You take it. That's an old joke. When you come to the fork in the road, you take it, but you got to make a decision, right? You got to make a decision. And the thing is, you got to make a decision soon, right? You got to decide if this market is going to continue to melt up. And I think it is. I've got a 7,000 target. I put it up to 6,500 when it was 5,500. And I think it's just going to keep on going on the backs of really what is a great amount of uncertainty out there in terms of mostly positive, which is how does this play out? How do these processes of efficiency and productivity play out for companies? So I think we're going to start seeing some beats where people are going to go, how did that happen? And we're going to start to point to those specific numbers. Right now, analysts aren't sure about how this plays into things, but they are going to very, very soon start to get a better idea of how this new regime is going to unfold based on how some early movers, some early beneficiaries, which I think could probably come from finance, probably the banking sector. I think we're going to see great numbers from Goldman. I still like that stock to $1,000. One of my biggest positions personally. I think we're going to see some very positive things. There's sort of that AI immediate boost is probably more of a low-hanging fruit for those kinds of companies that can immediately implement things. Are you going to implement AI and robotics in your business? That's going to take a little bit more time, right? That's more capital intensive. That's you have to see that there are certain areas, and that's what we're always looking at is where is that early thing happening, right? If you look at quantum on the Gartner chart of hype, you can see that it's still early. So I like to play those names, but we're early, right, in terms of when that is going to sort of yield some fruit. So we're playing these things that are really big, durable names right now, monetization ideas that are happening right now. Meta doing well, Microsoft doing well, Google starting to do well again as well as one of the great AI companies. So these are the companies that are literally putting this stuff to use. Oracle benefiting from this big build out. So this is what the kind of stuff that we're looking at. And guess what? You can jump on to my newsletter where I talk about this stuff all the time. So let me just make sure. I'm going to check and see if there are any questions here on this particular theme. You can jump on and get my newsletter. I'm not going to inundate you, right? I don't believe in putting out nonsense. So you're going to get good stuff. And I'm going to give you, over the next week, I'm going to give you more of these names that I think are going to benefit from this really, really cool real estate and sensitivity to interest rates theme, right? That's what it's all about too. We've been playing TLT, we've been playing LQD. I had a member come out and say, I just made 40% on some bond options. And I said, I told you that. I said, this is going to be almost as good when we start to see rates come in. This is almost going to be as good as owning a tech stock, right? That this is a regime change to lower rates and consistently probably lower rates. I think we do ultimately see 3%, and I think inflation, I think AI is quite deflationary in the long run. Certainly on wages, maybe not on certain people who are very, very good at AI, i.e. $100 million from Meta to work for them. But it's going to be deflationary in many, many areas of the economy. And that is a big component for companies. Labor costs, a big component for companies. So right there, you can look at margin improvement. So anybody who's bearish this market is really ignoring some of the very, very things that are clear, at least to me, that are very, very positive. Could we run into some problems at some point? Well, technically, we could probably get a pullback because stocks just can't go straight up. But this is a very, very exciting time. This is one of the most exciting times that I've seen. I played .com, and this is quite frankly bigger than .com. This is much, much bigger. Think about the inference phase of AI. .com was about getting people online and then, selling a few books, right? .com was about figuring this out. Now, and that was a challenge, right? You got to sell more computers. You got to get people online. You got to, but this is already established by all that work that was done. You can get on ChatGPT in 3 seconds. Everybody's got internet. And the adoption of AI is this versus internet like this, computers like this, right? So you've now set the stage for anybody can get on and that's why I kind of like Apple as well. I think it's AI in your pocket. Sure, they're a bunch of buffoons. They can't figure it out, but you can be in the right place at the right time, which I think they'll be. AI in your pocket. You don't have to go out and buy a computer because you heard about the internet. Wow, this sounds really cool. I want the internet. Let's figure this stuff out. It is there, it is happening, and it is starting to impact every corner of society, every business, on a personal basis for all of you who are using it, which I know there are some billion users of ChatGPT, and we've got 5 other massive models. So massive, massive usage going to make a very, very big difference. So is this stage of AI bigger than the internet? Yeah, massively bigger than the internet. Are we going to overhype it at some point? Are we going to overbuild? Yeah, we are, but we are very, very early innings. Yeah, this is structural, Matt. The .com was hot air. There were many, many companies. There are private companies out there that were started a year ago that have 500 million, AI companies that have 500 million in revenue already. This isn't sticking .com on the end of your name and your stock tripling and it being complete and utter rubbish. This is reality. There's only so much money to be made, but this is reality for people who can implement their ideas faster than ever. The ability for private companies to go from the very beginning to actually monetizing is going from like 8 or 9 years to like 6, 8 months, 1 year. We are going to see a massive, massive inflow of innovation. It's not all going to be great, but it's going to be the ability for everyone to now create. And that's why I kind of like, I think there's going to be a massive demand for ads as we create these new businesses. That's why I've been big on Meta. I've been big on some of these areas that are going to take advantage of that too. YouTube, absolutely massive. It's going to grow bigger than faster than people think. So this is really exciting. So I really, really love to see these. And this is when I came up with the Goldman idea, I said, this is an AI stock. And everybody said, what are you talking about? So this is also AI because you've got these companies that are forward thinking. Think of what Hood and SoFi are doing. They are appealing in a way that conforms to what people want now. It's digital. It's again, Hood came out this morning and they said they're coming out with a new shoot. I shouldn't have mentioned it, but it's something innovative, right? These companies are innovative, and millennials and the people who are inheriting trillions of dollars don't want their dad's stuffy three-piece broker. They want to do things the new way, the cool way. They want betting markets. They want crypto, all this stuff. So think of how you can combine real with new, digital with, bricks and chips working together, right? And so that's what I really, really love about Rocket. That's what I love about these other names that I'm going to give you when you sign up for this newsletter, and you are going to enjoy the updates that you're going to get. Why not? This is where we are, and so I'm excited. Yes, absolutely. Hood. Oh, that was it. Yeah, there you go. So we get how. Let me take a look at some questions. We got a few minutes here. Love how Hans requires themes and fundamentals to be aligned. Yeah, exactly. That's what it's all about for me. Like, I'm a trader when I zoom in, particularly in income, right? So my whole philosophy is income but capital appreciation. When there's a chance for us to be strategically greedy, that's why we're in markets, right? Why are you involved in risk markets if you want to pick up nickels and dimes and quarters in basic trades? You are in this to occasionally, when you see something absolutely phenomenal, that is going to be the generational life-changing wealth potential that is there, right? That's where you want to jump on board and start to zoom out and see the forest. You may live in the trees as a trader, but you want to zoom out and see the forest as well, because it's going to very much inform the kinds of things that you do, even on a shorter term basis. So absolutely, Job says, love how I require those themes. Yeah, I think you do. Like, I don't just throw darts at the board. I'm trying to think about this stuff. And I think it's going to be, yeah, I love Microsoft. Sniper, I really love Microsoft because they have that immediate benefit from that ecosystem, right? So they are an immediate monetizer. Azure is growing, really great growth. They have the ecosystem, right? So one of the things about AI is AI on its own is not really going to make any money. How much money are you going to make selling $20 GPT or $200 GPT even? Eventually, we're going to move to, okay, you're using a lot of tokens. You got to pay us $2,000 a month. So there may be some monetization ability that happens from actually selling AI as the foundation for many things, right? So when AI starts to become, as it will, like, everybody's getting excited about this MIT study that was like 95% of companies can't make use of it. Like, shoot me in the head right now, because you couldn't be any earlier than that. It's like saying the printing press came out in 1440 in April, and by May, they're going, man, this thing's not really helping anybody. This is getting going. That enterprise spread is going to happen next year and the year after, where AI isn't hallucinating anymore, where it's actually being useful. Right now, it's not that reliable. So we're still very much in the idea phase of inference. Training is going to continue because we got to build, right? We need data centers. We're going to need power for it. They're running out of 5 gigawatt. They ran out of 5 gigawatt generators. Now they're going to 3s. Those are going to, we're going to have some issues in this build out. So that could be a little bump in the road at some point for the actual picks and shovels makers. You may kind of run into a little bit of a wall where there's only so many resources out there, rare earths, things like that, right? There's only so much of it out there, but it's going to continue. The Saudis, they're just going to continue. Look at Nebius, which we had made like 100% on overnight on a trade in Turbo Income. So look, this is happening. It doesn't mean stocks are just going to go up, but it means that you always want to have these themes in the back of your mind. And this is a really, really cool one, because real estate's just been frozen for so long. And everybody's like, man, this is never going to be of any, investable quality theme again. And it's starting to happen a bit. So I think it's one of those things to look at. And then, of course, all these other wonderful names that we're considering as well. So that's about it, guys. So let's take a look. Any other? Andrew, thank you for being here. Wonderful to see you. The great AG. Helpful to make mortgage interest deduction. You know what? I think Trump's going to figure it out. He doesn't give a damn. He's the honey badger. He's like, you know what? Let's do it, and we'll worry about the repercussions later. I am quite tall. My wife says I've shrunk a little bit. Is that reasonable? Do you shrink? Not at my age. Yeah, look at that. I mean, look at all these companies. Fiverr said it yesterday. They said, oh, we're going to fire 250 people. We're all about AI and efficiency. That's not bad news. It's bad news for the people getting let go. But this is where the world is going. So there is an employment element to that we want to keep an eye on. But 100% we are seeing it in technology. We are seeing it in various areas that are especially male dominated, which kind of interesting. I saw this chart the other day. Women employment, female employment doing well, men not so much. And you may have thought that, women are kind of like, don't take this the wrong way, but a lot of kind of clerical assistant jobs, or more of those, right? Plenty of smart women and great achievements, but a lot of them are kind of in those areas where people are like, well, AI is just going to kind of mow that lawn. It isn't there yet, right? As I said, it's not the easy button. And it's more technology, finance, those areas where I talked about that low-hanging fruit. That's where men are having trouble finding jobs out of school and are getting let go. So very interesting divergence in sexes. Very interesting. Okay, guys, 10:30. I love you all for being here. Thank you so much. Get on that newsletter. If you don't, I'm going to talk to you in a year and go, what were you thinking? Okay, I think we got some other shows. Thank you again for being here, and have a terrific rest of the week, and I will see you later.